Move on to the U.S., where the stock index futures pointed to a higher open today as geopolitical concerns surrounding North Korea and the West appeared to show signs of receding. Now, this comes as President Donald Trump issued a statement which says that all options are on the table when it comes to its relationship with North Korea going forward. In the previous day's trade, markets worldwide were on edge following news that North Korea had fired a ballistic missile which had passed over Japan. However, investor nervousness around North Korea appears to have eased. And looking at the future numbers this morning, the Dow Jones Industrial Average was looking up 0.12%. S&P, of course, was up 0.06%, and Nasdaq tilted up 0.15%. In Asia, markets closed higher today following the stronger lead from Wall Street overnight as traders appeared to shake off new North Korea missile concerns. Japan's Nikkei 225 added 0.74%. Across the Korean street, the Kospi edged up 0.32% as tech stocks made gains following Tuesday's sell-off on North Korea's missile launch. Australian ASX 200 closed just above the flat line with a 5.66% fall in the telecommunication services sub-index, offsetting moderate gains in the information technology and consumer staples sectors. The benchmark index closed higher by 0.01%. Greater China markets were mixed. The Hang Seng index rose 0.98%. Mainland markets turned in a more subdued performance. The Shanghai Composite shed 0.07%, while the Shenzhen Composite tacked on 0.354%. And to all the market news on here in Africa, a U.S. court has ruled to lift 2 restraining notices that had blocked a coupon payment on Congo Republic's $363 million Eurobond amid a $1 billion legal dispute between the government and a construction firm. A payment on the bond maturing in 2029 was frozen in June after Commission's Import-Export SA filed 2 restraining orders to the bond's trustee, the Delaware Trust Company. Congolese authorities had transferred the payment a day before. It was not immediately clear if the coupon payments have now resumed. And South African precious metals producer Simbai Gold has reported an interim loss, citing impairments and provisions for an expected settlement with miners who contracted lung diseases at work. A class action lawsuit, mostly related to the fatal lung disease silicosis, was filed on behalf of miners in 2012 and has led to mounting provisions related to the health and safety conditions afforded the black workforce during South Africa's apartheid past. The company posted a headline loss per share of 147 cents for the 6 months to June 30, in line with what it had previously flagged to the market. That compared with earnings of 79 cents in the same period last year. The provision for the expected occupational health care settlement is 1.077 billion rand. As a result, the company says it will not pay dividend. South African base minerals and metals producer ASO has posted record profit on higher prices, but says it expects a supply glut to impact negatively on prices. The company says headline earnings for the year to the end of June increased almost 200% to a record 5.2 billion rand, in line with what the group had previously flagged to the market. The full-year dividend doubled to 14 rand per share. Earnings were further boosted by the group's chrome unit, which benefited from a pickup in Chinese demand, posting a net profit of 843 million rand in its first full year of inclusion in the group's results. Meanwhile, South Africa's government is considering merging its 3 state-owned airlines into one entity and offering a 25% stake of the holding company to private equity. The loss-making South African Airways, its low-cost arm Mango, and SA Express, which services smaller towns, are struggling to remain profitable amid increased competition and rising operational costs. And staying in South Africa, the country will press the newly elected Angolan government to pay 850 million rand it owes struggling South African Airways. And that's according to the Finance Minister, Malusi Gigaba. The airline runs one of Africa's biggest fleets, but is loss-making. SA has owned a total of some 1 billion rand in revenue earned in other African countries, with Angola the single largest debtor. The minister says the Treasury is talking to Angola and other African governments that owe the airline to get the funds repatriated. On a bid to keep its planes flying, SA is seeking a 10 billion rand bailout from the Treasury. And back here in Nigeria, Europe's largest insurer, Allianz, has announced agreement to buy Nigeria's mid-cap Ensure Insurance PLC for an undisclosed amount by the end of 2017. The multi-billion-dollar Munich-based asset management company with vast footprints across Africa for more than 100 years plans to enter the Nigerian insurance market in a binding deal for 98% acquisition of Ensure Insurance shares from Greenox Global Holdings Limited. Now, last year, Nigeria's Ensure Insurance PLC posted $13.1 million in written gross premium. Allianz reported $1.5 billion euros in gross premium in 2016. Allianz's regional chief executive for Africa says the Nigeria acquisition marks a major milestone for Allianz's long-term growth strategy on the continent. We'll take a quick break now, and when we come back, the program continues. To stay with us.